Hello traders, welcome. This channel focuses on detailing Forex aspects in a manner that transforms traders to professional and profitable Forex traders. Kindly remember to subscribe. The Forex market opens at 00 hours on Monday morning and runs continuously till Friday night at 23:59 hours. Have you ever wondered, are there times of the day when a trader can have more trading opportunities than others? Well, there are and there is. This video seeks to enlighten traders on the major Forex trading sessions. Since each trading session usually presents unique characteristics which can help determine the profit that a trader realizes. Typically, the Forex market has three major Forex trading sessions. The Asian session, also called the Tokyo session, the European session, also called the London session, the US session, also called the New York session. Let us look at the Asian session. The Asian trading session is often underestimated due to its lower liquidity and volatility. Even so, it holds an appeal for those who know how to trade it correctly. The Asian session usually begins at 09 hours Japanese Standard Time and ends at 18 hours Japanese Standard Trading Time. It usually opens when Tokyo banks become active, with the New Zealand, Sydney, and Australia initiating the Forex trading day. Usually, the Asian session has low volume, since the Europe and the United States economic centers are usually closed, and therefore most of the market participants are usually not trading during those hours. It is characterized by clear entry and exit levels. For that reason, it is the most ideal session for risk management. This is because traders can be able to see that they will be able to take probably a short position at a certain resistance level and exit at a certain clearly marked support level. Now, the choice of currency pairs to trade during the Tokyo session depends on individual traders and their strategies. And this is where it becomes very important that traders should understand themselves very clearly, because the way one trader trades is not the way another trader trades. And the strategies they employ, even with the different sessions, usually vary from trader to trader. Typically, those traders that seek volatility usually tend to trade Japanese yen, Australian dollar, and New Zealand dollar pairs. Conversely, for those traders that prefer less volatility, they trade non-Asian currencies like Euro USD, Sterling USD, and Euro Sterling, which usually presents lower volatility during the Tokyo session. I hope you have understood. One of the things that is very important to capture here is that there is low volatility and volume during these sessions. And for that reason, the market or the Tokyo session tends to exhibit a lot of a kind of trading that is referred to as range trading. That is, there are clear areas of resistance and support, so that a trader can take a position at a certain resistance level and exit at a certain support level. Now let us look at the next session, which is the London session. The European session is also called the London session. London's forex market operates from 3 a.m. to 12 p.m. Eastern Time. It holds the highest forex volume worldwide. It has an approximately 35% of the market share. You know, in other words, what we are saying is that the London session carries 35% of the total forex market share, and it is usually the most traded session amongst the three sessions. Many major banks position their trading desks in London due to its market dominance. The multitude of participants and substantial transaction values in the London session results in higher volatility compared to other sessions. So you are seeing that a lot of participants and a lot of transactions usually take place during the London session, and they are the reason why there is both high volume and the market exhibits high volatility during the London trading session. So some of the features of the London trading session include it is very fast and highly active. It has the overlap period, and then it is highly liquid. So basically, the transition from the slower Tokyo market to a London session introduces increased volatility, making support and resistance levels easier to reach during the London session. Again, the other feature, which you have seen, the overlap period, usually occur when the London and the US session coincide, that is, at 8 a.m. Eastern Time to 12 p.m. Eastern Time. That is the hours between 8 a.m. and 12 p.m. Eastern Time, combining the one's two largest market centers. This convergence results in significant liquidity influx and rapid market movement. It is for that reason that we have seen that support and resistance levels are usually easily broken during the London trading session. So if a trader takes a position, say a long position, expecting to exit at a certain resistant level, then it is very easy for the market to move against their trend, since the market can easily break or go below the point where they took their long position at. It is therefore important for this during this time traders to really look and see appropriate stop levels that they can use to avoid making huge losses when the market takes an opposite direction with their trends. There is high liquidity that is exhibited during the London session. It is the most liquid, resulting in very tight spreads for major currency pairs. But the trader might ask, which are some of the favorable pairs to trade during the London session? So favorable forex pairs to trade during the London session include Euro USD pair, the USD Japanese pair, the Sterling USD pair, and the USD Swiss franc pair. The Euro USD, the USD Japanese yen, and the Sterling USD pairs are particularly impacted during the overlap due to the interbank activities between the United States and the Europe and London. So basically, one thing that we have seen is that this session is highly volatile. There is high volume and high liquid available, which presents unique trading opportunities. If I was asked, I would say this is the most favorable time to trade because the London session is highly volatile. There is sufficient liquidity, And then there is the overlap period, during which also the US banks also come into play, enhancing and creating more opportunities. In essence, a trader can trade effectively during the London or at the London Open or the London morning session all the way to lunch session, and then when the banks in the United States begin opening, they can also carry on with their trading and trade the first few hours of the United States session and realize the profits close their day, and then they can rest and wait till the following day to continue with their trading. Let us look at the final session, the United States session or the New York trading session. The New York Forex session runs from 8 a.m. to 5 p.m. Eastern Time. It usually accounts for about 16% of the global Forex transactions. Most active during US Europe overlap. It is most active during the US Europe overlap, during which the highest volatility is usually exhibited. In other words, what we are saying is that the New York session usually open at a time that is the best time to trade because of high volatility and high liquidity. So the session, as a result, the session usually begin with higher volatility. It is very easy for a trader to just trade the New York session and realize all the profits that they might make or they might need for the entire day. Conversely, if a trader takes the wrong position, if a trader makes a wrong speculation, then it is also very easy for them to lose a substantial amount of their capital during at New York Open when the volatility is very high. During this session, some of the best pairs to trade include the Euro USD, the USD Japanese yen pair, the pound the pound versus the USD pair, the Swiss franc, the Euro USD, the sterling versus Japanese yen, and the euro versus Japanese yen. That is because these currencies are coming from the major economies, and of which most of them are usually involved at this time of the day. Basically, or to sum up, the New York trading session, the first hours of the New York trading session usually happen during the overlap period. As a result, those traders that are trading the London session, that is those in the Euro area and those in UK, and then those in the United States, as well as market participants who specifically target this time of the day, they have an advantage of trading the overlap period and therefore realizing quick profits, because during these times of this session, or rather at New York Open, you don't have to wait for a very long time for a position. You can take a position and the next 1 hour you have exited with up to 40 or even, let's say, 30 to 40 pips on a day that doesn't have very significant news to move market very high. On days that have significant news, you can't realize as high as 100 pips. And that's it for the trading sessions. We hope you have gotten some information that should be helpful to help you understand. Are you a trader who feels like you want to do some range trading? Well, the Asian session could be best for you. Or are you a trader who knows that you have sufficient time to trade both the London session and the New York session? Well, then the London and New York session are sweetened for you, and you have the advantage of trading at a time when the market is highly liquid and highly volatile. Thank you for watching. Remember to subscribe and let's meet again in our next video. Thank you.